Redfin is reporting that 46% of home sellers gave concessions to buyers in May. Nashville ranked at the very top. 75% of Nashville home sellers are giving concessions. Redfin is also reporting that Nashville is one of the strongest buyers markets in America. This in spite of Nashville median home price hitting a new record. Now, this is median. Nashville is ranked one of the most overvalued markets, 29% according to this John Burns index. Austin's only 6% overvalued. Austin is now 26% below where its 2022 peak was, while Nashville sits like 1%, maybe 2%. It's basically flat. How is Nashville not crashing and Austin is crashing? Now, if you have a theory about this, I would love to hear it. On one hand, you could look at this and say, well, Austin went up further than Nashville. But I actually have another theory. My theory has to do with cost to hold. Okay, we have properties in Nashville that, in fact, let me just find one. Okay, here's one that sold for $4 million for the property tax. $15,000 on a $4 million home. That's like 1/3%. If you go to Texas, let's just look at a property in Austin, Texas. $78,000. So you can pay $78,000 or you can pay $15,000 on a $4.2 million property in Brentwood, Tennessee. Now, you tell me, if you were in Texas, you're losing almost $100,000 a year waiting. Of course, Austin's going to crash because the pressure using property taxes is extremely high versus Tennessee. So what could create that downward price pressure in Tennessee? Would it take more inventory, active listings? Which, by the way, active listings in Nashville, we're at 9,800. We're so close to getting 10,000 single family homes listed in the greater Nashville area, which this 9-county region, this greater Nashville. If they talk about Nashville City, they're normally talking about Davidson County. If you search Zillow home values and did Nashville, what you would probably see is down 3.3%. That's really just talking about the Davidson County. If you looked at the metro is down 0.9% this year. And if you looked at from 2020, we're really down like from the very, very peak. We're down maybe 2% versus Austin, which is down 26%. And one of the things that I do when I'm looking at active listings and contract volume is I create a ratio of active listings and contract volume. And the reason I create a ratio is because that kind of tells you, relatively speaking, where you're at in the market, how hot it is. If active listings are up 30%, but demand's up 100%, it wouldn't feel any better. What I do, and this is actually a way to time the market. People are like, oh, you can't time the market. This is how you time the market, is you look at active listings compared to contracts over the past 31 days, and you just plot it every single day. That's why I created this chart right here. And then you pick your price band. So let's go, I don't know, 1 to 2 million, and we can see the best time to sell. Believe it or not, it's not May 9th. That's the bottom. You want to be already on the market when May 9th hits. You want to list into the downtrend, because what you want to list as more and more demand is picking up. It feels relative to inventory. You want people to feel like it's getting harder and harder to buy every single day if you're listing. Now, if you're buying, you want to really find the incline, and now it's harder and harder to sell every single day. So when that's inclining, like it has in the past month, big steep incline, as it gets above 5 and 6, it's a great time to buy. We're almost there in the $1 million range. And if you go to the $2 million range, this is now getting easier and easier for buyers. It feels like an 8.8 month supply. Last year, it felt like 7.9. We should see it continue to move up, and that is when you want to buy, really August through November, maybe even December or January. Now, if you're looking in the 500 to 700, it does just kind of incline for the rest of the year. So it should get better and better to buy throughout the year. That doesn't mean that good listings don't go quickly. And if you're in the condo market, we're now at well over 6 months relative the feeling. And if it continues to increase like it did last year, I mean, we could be 8 to 10 months. This is on the MLS. This isn't even the stuff that people have given up on. And when you dial into specific areas, like look at the 500 to 750, we're at almost a 10-month supply. A 10-month supply in June for condos in the 500 to 750 range. That's not good. 300 to 500 is skyrocketing right now. If I'm looking at condos, I'm taking my time. If you dial into like a Davidson County, major spike. Look at that. Oh my gosh. Okay, so these spikes right here, I just saw this, but this 500 to 750 spike in condos, okay, this is your buy signal. It's completely blown out, right? If you were looking for a condo in the 5 to 750, this is your buy signal. It's completely blown out to anything that's happened in the past years. So you want to filter on 5 to 750. And I mean, let's just see what's happening in Davidson County. Okay, we've got active listings, 300 active listings. Let's see contract volume. This is a buy signal, okay? It's not going to continue to nosedive. It'll bob back up at some point, okay? But right now, it is feeling terrible for sellers, absolutely terrible. And you've got, what, 47% more condos for sale in Davidson County, and you have contracts that are 50% lower than last year. If you're looking for a condo in the this is just 5 to 750 in the condo in Davidson County, that is your buy signal. Let's take a look. What are we seeing here? Okay. Lots of listings off of Long Boulevard and 31st. This is a great walking distance to Vanderbilt. You come over here, it looks like both the Pullman 1212 has got 5. 1212 has seen some of the largest price drops we've ever seen. This is the Illume. Looks like it peaked at close to $900 per foot in the Illume and now heading towards what appears to me is $600 per foot there. That's essentially a 30% drop. Enclave, there's only 4. There's actually more than this, but I think there's only 4 to 500 to 750. That explains what is going on in the Nashville market to a T. If you're really trying to buy, if you want a very practical approach to looking at something, the active to contract ratio is a way to say, is it tighter than it was last year? I created a map for this. If you go to my neighborhood tracker, and you click on the competitive score, it literally just takes that active contract ratio and compares the shift from last year to this year. And that's what the blue and red are. If it's blue, it's less competitive than it was last year. If it's red, it actually means there's more under contract relative to the inventory compared to last year. It is a way to time the market. It literally just depends on what you're trying to buy, where you're trying to buy it. Do you see the buyer's market that Redfin is describing in Nashville, or do you see something different? I would love to hear your perspective. And with that, I hope you all have a great rest of your day. Have a great weekend. I look forward to seeing you next Saturday. Thanks for watching.